This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
What's going on, everybody? Welcome back, Real Estate Investing 365. Today I got with me Ryan Weimer on here. He lives in San Diego, beautiful, sunny, warm weather, good-looking people, San Diego, and not up here in Idaho. But I think he does a lot of his investing up here in Idaho in his real estate business. So Ryan, what's up, man? Thanks for being here.
Thanks for having me. Appreciate it.
Yeah, absolutely. The weather's nice down there, and actually it's pretty nice up here today. It's like 45, which is the highest it's been in months.
There we go.
So it's not quite 80 degrees like San Diego, but that's all right. So why don't you start off by telling everybody a little bit about yourself? I think you still work full time, but you have a real estate business that's kind of growing, right?
Yeah. So I guess backtracking a little bit, I graduated with an engineering degree from a pretty small school in Colorado called Colorado School of Mines, and right away jumped into the oil and gas industry. And things were good for a couple years, but then the market kind of tanked there. So I got let go and just decided I kind of wanted a life change. I was in Denver at the time and just wanted to do the beach thing for a little bit while I could. So moved out to San Diego without a job, kind of cold turkey, and took about 3 or 4 months to kind of figure my stuff out, and was applying to quite a few jobs, and got another job with a company in the semiconductor industry called ASML, which is where I work now. And I'm an engineering project lead for them. So I do a lot of project management. Okay. And it's flying around the world to a lot of our customer sites, overseeing upgrades of equipment. So we do work with like Intel and Samsung and some of the big chip makers and chip manufacturers. So,
okay, that's pretty cool. So you get to see a lot of you fly all over the place up until COVID, I assume.
Yeah, exactly. And then about halfway through my career there, I kind of came across some challenges that I wasn't really achieving everything I wanted to achieve. Like I had been promoted and everything, but there was such a finite ceiling on like what I could do. Mm-hmm. And I wasn't really building anything towards my future or any passive income or anything like that. And I got passed up for a promotion, and that really sparked my interest in real estate. Like, okay, I need to start, like, I'm not just going to be able to climb here as fast as I want to or think I should.
Right.
I need to start paving my own way, start, producing some assets and making a name for myself that way, and see how this goes. So that's kind of when I found real estate in bigger pockets. And for me and my engineering mind, it was just kind of a simple math equation, right? Like if I can buy 10 rental properties and they each cash flow a couple $100 a month, well, how many properties would I need if running the numbers to be able to replace my income?
Mm-hmm.
That's when I got hooked.
Yeah, that's totally true. I think that's what a lot of people end up thinking about. They either hate their job and they don't like their boss or whatever, and they just hate like getting up in the 9 to 5. And so that's what pushes them toward real estate. Or they think, I don't really mind my job, but my upward trajectory isn't very far. I can't like continue and go up the ladder to a certain extent. I mean, that was like where I was at. I didn't hate where I was at. Maybe I left too soon. It was probably, it's a good job to have, but I feel like if I never made the jump, I was just like year after year would go by. But the upward trajectory, I would have to be, never, if I want to make $1 million a year, that's like almost impossible to do, being at a big corporation like I was at, so, I definitely understand what you're talking about. But how did you even get the idea to do real estate? Because there's so many other avenues out there. You could have just started a business, you're an engineering guy. You could have started your own engineering firm, done something like that. What drew you to real estate?
I think really it was just because I had looked into all those options, and
Hmm.
um I think really it was just like the ability to do it remotely with how far technology has come.
Hmm.
Zillow and Bigger Pockets presence and having really easy access to a lot of information like that made it more comfortable for me.
Yeah, for sure. Okay. So what year was this? What year did you kind of get this bug? And then what year did you get started in it?
I probably got the bug in like 2017 and then went for it in 2018. I was doing all the research about like best markets to invest in, and I had just purchased my condo in San Diego the year before. But running the numbers, when you're in an expensive market, you're not going to really hit any kind of cash flow numbers that you're wanting to see.
Yeah.
So your rent is not going to be high enough versus the mortgage you're paying. So I was looking up all the lists of like population growth, wage growth, job growth, and Boise was hitting all of them. And actually, my college roommate was born and raised in Boise, so it was a comfortable first step to talk to him about it, and then take a trip out there. Like we went to a Boise State game, and then like drove around and looked at all the neighborhoods, and then we ended up just buying in 2018 our first single family rental property 50/50 that we still own together.
Okay. Sweet. So you guys ended up just going like the traditional route. You went to an agent. You kind of knew he knew of the areas, and then you checked him out, and you found one that ended up doing well.
Yep.
So did you just get conventional financing on that, like 20% down? How did that process kind of go?
Yep, it was 20% down. We each came with 10% plus a little more for the closing costs. Uh, and the best part about this guy, his name's Corby Goad, the realtor that we still work with extensively. They also have their own property management company, and he's an investor himself. So, we interviewed, I don't know, 6 or 7 different realtors along the way before we decided to go with him. But the fact that he was a one-stop shop really kind of sold it for us, that he knew what he was doing, and it made us feel comfortable enough to do that. So
So
um
was Corby your friend that you grew up with, or was he
no,
just a realtor that you ended up finding?
he's the realtor. Yeah.
Okay, talk about that a little bit, because people go to a new area. How did you come across him? You said you interviewed like 6 or 7 real other people. Did you just look up on Google like realtor in Boise or what?
Well, yeah, like kind of during my research phase, I was spending a lot of time on Bigger Pockets online, and I
Hmm.
was just asking random questions about the market and price points and like the demographics and what kind of jobs there were, and trying to figure out all that stuff. And every time I would ask about Boise, he was always
Chiming in.
responding. So
Okay.
um, yeah, and then the other few were like family friends or people that you know referrals from other people that we also interviewed.
Yeah, I mean, it seems like everybody's an agent. You know what I mean?
I,
So, I think up here when I first moved up here in 2017, the first time, I had my Idaho agent license. Not that I was doing real estate really, or real estate sales, anyways. And I think at that time I heard there was like almost 6,000 agents in the valley, right? It's like, well, there's only at that in 2017, there's only 700,000 people in the valley. So it's like one in every 10 people is a real estate agent. It's just
that's
ridiculous.
insane.
And I guess that's indicative of a hot market, right? Stuff's
Yeah.
easy to sell. But then again, it's not easy to sell if you don't have any listings. So,
Yeah.
um, okay. So Corby Goad, I've heard his name actually now that I've been living up here. I think he has his company is Turnkey Boise or something like that, Turnkey
Yeah,
Idaho or something.
Boise Turnkey. Yeah.
Boise Turnkey. Okay, so he was answering your stuff and everything, and which is good. I think a lot of if there's any agents listening, being involved in Bigger Pockets, if you want to be with investors, like just taking the time to go on there. But it's difficult, but it's definitely like a time management thing you need to like fit in, because like I know so many people that reach out to agents that talk to them on Bigger Pockets. So you found
Yeah.
them on Bigger Pockets. You ended up reaching out to him. He had the property manager built in. You said, okay, this guy kind of knows what he's doing. He knows how to run the numbers. He's probably pretty close on his rent, which is another big thing with agents. They don't typically know what a property's going to rent for.
Yeah.
Okay. So how many properties did you end up looking at before you bought that first one?
Oh gosh, it was because this was still all, since this was our first one, everything was on market. So it was, um, we probably made like 5 or 6 offers prior to that on different places. And the way we got this one was, uh, the buyer had just backed out. It was between Christmas and New Year's, kind of that period.
Mm-hmm.
And the buyer had just backed out because they found like a really small amount of mold in one of the bathrooms, and that spooked the buyer, so they backed out. So it got put back on the market, and then we jumped at it like within 12 hours or something, and they accepted right away.
Sweet. Yeah, because even in 18, I mean, it was crazy. I think Boise's had like a 10% year over year price increase for the last 5 years before like 19 to 14. But 2020, there's a 20% price increase. So I had 5 years in a row of 10% and then a 20% year over year in 20. So even in 18, it was just like on fire, right?
Yeah, it's insane. It's insane. But then, so that was like after the first month when we got it rented, and my mortgage was like $1,000, and then after property management fees were like another 150 or 200, and I was getting a check for $1,500, so I was cash flowing like $200 or $300. It kind of clicked for me, and I was like, oh my gosh, this is amazing. I'm sitting here not doing anything, and every month I get a check for
Yeah.
like that $200 or $300, and it was just the coolest feeling ever.
Okay. Yeah, no, it definitely is. When you start getting those checks, I remember like my first property was the same way. I was like, the guy would bring me the check, and I'd be like, every month I'm getting this check for $1,100, or it's
Yeah,
1,050 that first place I was renting, and I was like, my mortgage is like $600. This is great.
yeah, yeah.
I didn't really know how to account for all the other expenses, and I was doing the property management, but still, it was pretty cool. So you got that first place, and then I assume now you're not doing the on market stuff. So what was the transition period from buying that with an agent to like what was the next step where you're like, hey, I need to get more of these?
Yeah, so I think it was just how hot the market's been.
Mm-hmm.
It was going through that experience and having to get like 5 or 6 offers rejected, and just not feeling like, number one, you're not really getting the best deals, but number two, just becoming frustrated with the lack of inventory and just the competition level. So then it evolved into, okay, how can I start finding more of these off-market opportunities where people are in distress and they're willing to sell at a discount in exchange for some kind of value, whether that's quick cash, or they want to do a rent back, or they want a really long closing, or they're in debt and they have bills they can't pay off, they're in foreclosure, those kind of things. So then it really evolved. Month over month, I started doing like some cold calling, started looking on Craigslist, did some yellow letter campaigns where, like, as I was traveling for work on the flights, I would just write like 100 handwritten letters and send those out.
Yeah.
And I got my next property that way, actually, from a yellow letter that I had written. So
Okay. Where'd you get that idea that you were like, let me just go direct to sellers? Was it just because you were doing research and it was on podcast and things like that?
yeah, I was at that point, I became even more obsessed with like the Bigger Pockets podcast, and I would just listen to like every single episode.
Mm-hmm.
Um, and I think in real estate, like, as you know, it's super easy to get shiny object syndrome, because
Yep.
there's like syndications, mobile home parks, single family homes, multifamily, commercial, and
Everything.
like, and everything, right? So like, how do you pick? There's flipping, so how do you pick what avenue you want to do? And um, that was really important for me because I read the book The One Thing and Rich Dad Poor Dad, and it really helped me like hone in my focus that I was going to go after just finding off market properties and kind of worry about the rest later, because
Mm-hmm.
that's kind of the origin of everything, right? Is like finding the opportunity, finding the deal. So
Yeah, I definitely agree too. Is like kind of try to stick to one thing until you get like an expert at it and either get systems built to where it continues on and then you can move on to the next. I'm definitely have a victim of that to like shiny object where I wish I would have just like focused on one thing, like buying small multifamilies or single families. Because if I would have, there's been times where I've gone a long time without buying anything. And it's because I was out there like looking, oh, I want a 20 unit apartment building. Oh, maybe
right.
I'll go offer on this self-storage unit, like doing the stupid stuff when I'm not really learning enough and focusing on one thing that I could have been way ahead of where I'm at now. So that's good that you focused on that and decided to go direct to seller. So at first, so in 2018, did you start going direct to seller and started just calling, like you said, and writing letters, or was that in 19?
That was 2019.
2019. Okay.
Yeah.
A lot of people are interested in doing that right now. I mean, everybody seems to be. I mean, a lot of people have done it for the last couple of years, but so how did you like for somebody that's never done it before and they have no idea, they're like, man, I want to do that because the market's hot. The only way I feel like I can get good deals is do that. Where do they start? Like, what's the first thing they do?
The first thing I would do is I would just go on Zillow or go on Bigger Pockets. But Zillow is nice because you can kind of see, you can just put in certain parameters in an area and see like what a property will rent for, what some of them are selling for. And that time, sometimes it's not always accurate, but then you can click through the pictures and see the location. And now they have the street view, so you can kind of like look what the neighborhood is like a little bit. So that'll give you a really general feel for understanding the market more. So
To kind of determine your area, which area you want to buy in.
yeah, exactly.
Okay.
Exactly. And then I'm trying to think what my very first list. I think I just went on either Craigslist or Zillow and looked at properties that were under market rent. So I set up a search that was like, okay, if the median rent for like a regular starter home, single family home was like $1,500, I saved a search that would alert me whenever a property below that got posted.
Okay.
And what I was looking for was either mom and pop property managers or properties that maybe weren't really fixed up nice. So that's why they weren't renting for as high.
Okay. So that was like the motivation to sell, was that they're probably mom and pop people that is maybe they're sick of having renters. They're obviously not taking care of the place. So let me give them a call. Did you filter them for anything like equity, or you just like at first you just like, let me just call these people?
Yeah, just like the very first time I was just calling them. So
Okay.
anyone I was totally fumbling my way through it. And I think it took me a solid 6 months to start that. So like the end of 2018 was when we bought that first rental 50/50. And then probably midway through 2019 is when I finally gained up the courage to start making these calls. Cause it's kind of nerve wracking calling strangers out of the blue, right? It's just
Sucks.
yeah, it sucks. And nobody's born to do that. It's not like people are just born to cold call or whatever, right? It's a skill you have to develop, just like going to the gym or getting better at running, right? You do like a little bit each day and slowly over time you get better. So I think where a lot of people get stuck is they get that paralysis analysis, that they feel like they don't know enough or they don't know how things are going to work or play out or whatever. But if you can put that aside and just like take the blind action and kind of fumble your way through it, and approach everything like that, you're going to have a lot more success.
Okay. Yeah, definitely. And you didn't even have to use at that time like any programs or software to like to skip trace your number or do any like this technical stuff. The numbers are already there. The places are for rent. So I guess you would filter, you would tease out like property managed companies or houses that were managed by a property manager, right?
Yep.
Okay. All right. So that's cool. So you started doing that. Did you get a deal off doing that? You mentioned you got your second deal, I think, that way. And then at what point did you kind of like increase your business there and start into bringing in other things in the business?
Yeah. So then I found Wholesaling Inc., which has, uh, it's kind of wholesale specific podcast, and I think they have some video content and YouTube content too. And their MO is just really niche, like how to find distressed sellers. So how to market to, people that might be in distressed situations.
Mm-hmm.
And I sort of stopped listening to as much Bigger Pockets and started listening to more of that. So to narrow my focus. And I flew out to Boise a couple times and spent a couple weekends driving for dollars. So just driving around and looking for properties that might have overgrown grass. There's a hole in the roof. There's like junk cars in the front. There's paint peeling, like anything that might indicate some kind of physical property distress.
Yeah.
And I would take that address down, and then I got like a few hundred properties from those couple weekends, and then I skip trace them to get their phone numbers from public records.
Okay. So when you came here, when you flew out here and you did some driving for dollars, did you stick to one specific neighborhood, or like, because if somebody's going to look at a city, they're going to be like, how the frick, where do I start? Do I just like start in the middle of the city and start driving around? Or like, how did you determine that area that you were going to start in? And then was it just one area?
I think I started kind of in the Garden City area because it was gentrifying.
Mm-hmm.
And still is. So I was kind of looking for that, kind of the first block that homes started to look maybe a little more run down, or there was still some industrial going on there. So I was looking for areas that were like right on that, in the path of progress, essentially.
Okay.
But yeah, I picked a couple neighborhoods there and just focused on those.
All right. Did you use a Driving for Dollars app, like the Deal Machine app, or did you just like write them down?
I didn't to start. I just wrote them down, but with how cheap and easy to use Deal Machine is, I would definitely recommend it. That's what we use now.
Okay. So Deal Machine, if anybody doesn't know, Deal Machine is just like an app that it'll track, right? Explain to people real quick how it kind of works.
So you drive around and it has a map on display. And as you drive past a property, you can just pin different properties, and sometimes it'll have like the owner name and information, because it will pull from public records too. And then you can just, when you're done, you can just export it into an Excel sheet, and it'll have the property address, city, state, zip code, everything all nice for you, so that when you upload it into a skip tracer to get their phone numbers, it's all in the correct format already.
Okay. And if anybody doesn't know, what's a skip tracer and what program to use?
So I use Lead Sherpa for my skip tracing.
Okay.
Batch is another one that you can use.
I could have swore you're going to say batch first, but
no, there's quite a few of them. All it does is scours the internet for anything that's public data or public records, for phone numbers, emails, all that kind of stuff. So the accuracy is, usually like anywhere from 70 to 80%, I would say. But it just kind of depends. So,
and some areas might be way better accuracy, right? Like if you're in Arizona or California, I think they have pretty good data, but Idaho and there's a few other states that are like non-disclosure, and it's like a little bit harder to get info. But what else are you going to do, right? I mean, you have to get the owner's information. So,
right.
Lead Sherpa. So Lead Sherpa, I know of them from being more of like a texting platform. But they also do skip tracing, you say?
Yeah, you can just use their skip tracing too. You don't have to also be a texting member to use it. So.
Oh, okay, cool. So you came out here, you started driving around you came out here on a couple trips, you drove around, you identified your market, drove around, identified a bunch of properties, had a few hundred properties, you put it into Lead Sherpa, you skip trace them, and you're just like, hey, I'm just going to call these people. And so you called those few hundred people, and then you end up getting one deal or a couple deals, or how'd that work?
Yeah, I got another deal after that. And then from one of those, like a couple months later, from one of those first yellow letters that I sent out, I got another deal after that. So I had about 4 deals in 2019 total.
Did you end up selling those or keeping them? What did you do with them?
I flipped one of them. I flipped 2 of them, and I kept 2 of them as rental.
Okay. Single family rentals?
Yeah.
All right, sweet. And then, a lot of people are asking, oh, well, he must just have tons of money because he's this big engineer in San Diego. How did you fund the deals? Did you just pay cash for them or you get hard money? What was that like?
No, they were all conventional.
All
So
conventional. Okay.
the cool thing about when you're doing off market is you can kind of, it's all in negotiation. So I was getting stuff on like a 45-day close or a 60-day close that I knew my lender could meet just fine. And these weren't super distressed properties or anything, so that they could, still qualify for conventional financing.
Right. Okay. No, that's good. And then something I really need to get into, and maybe you're doing it now, is more just asking everybody if they'll do owner financing. I've mentioned it before on the show, and I had, for the listeners, Gabriel Hamill. I forget what episode, but you guys can go back and listen to him. And he has like 180 properties, and every single one, 100% of them have been owner financed.
That's
right.
amazing.
And
Wow.
so it's like, what a deal that would be, because typically, like, I was just talking to a lady the other day that I just came in contact with, and she wanted to sell me 2 of her townhouses, and she was wanting to do owner financing. And for some other reasons, it didn't end up working out, but, she only wanted 10% down, and she wanted a payment for like 7 years. And I was like, this is great. It didn't work out for other reasons, but if you can do that, that's a ticket. So I really need to focus on trying to ask more owner financing things,
Oh, totally. And we've kind of switched to that model too, now lately. But once I got those first few deals, and like I got a home equity line of credit on my primary place here in San Diego. And then after 6 months from that first rental property that we bought 50-50, we were able to cash out refi from that. So I had a little bit of, and that's the thing, what's so exciting about real estate is things like really snowball for you. Like those first couple moves, they take a lot of time, a lot of emotional energy, a lot of learning, right? But then you start to stack those small wins, and things just get exponential for you. So in 2020, things like totally exploded for me because I got a lot better and a lot more refined in my processes. I started doing cold calling regularly, and I started doing about a deal a month for the first 5 or 6 months of 2020.
Okay.
Yeah.
So in it kind of started scaling up like that, which is, I wanted to touch on that real quick, which is a huge reason why people that have been in like the corporate world or working for somebody else for so long, everybody is really comfortable with the linear growth, right? Getting slow, incremental wage increases over time, putting some money away, and just like going up at an angle. But real estate or investing or your own business, Andy Frisella talks about it all the time, and in your own businesses, it's like you might have months and months or years and years of like barely any growth. And it's like, gosh, easy to get frustrated. But then all of a sudden you get 1 and 2 and then 3, and then all of a sudden 10 and 100. And then it's like, sky's the limit. So it's just like a different mindset shift, which is what I think probably propelled you to go this way more full time.
Yeah. Well, I think to add to that too, like when you're in that ramp up phase and you're not really getting the results you need, and you're going months and months of calling or sending mail or whatever it is, and you're getting discouraged, I still listen to the Wholesaling Inc. podcast daily. I still listen to some Bigger Pocket stuff. I still listen to Pace Morby and Brent Daniels and some of the other, big wholesalers in the game. And I got a mentor, and like all of these little things are giving me positive reinforcement every day and encouragement every day.
Yeah.
So I'm still motivated each day to take a little bit of action, a little bit of action, a little bit of action, right?
Yeah. Keep that flame burning, because it'll start to dim It'll start to go out. Sometimes it will, so keep it going. Okay. So in the 2020, you did like a deal a month for the first 4 or 5 months. Then all of a sudden it took off. Cause I do know I listened to your podcast with Brent Daniels, I think it was,
Awesome.
right?
Yeah.
And he told me what you ended up doing in 2020. So why don't you let everybody know what ended up happening in 2020 and why that happened?
So a few things happened. Whenever you're doing direct to seller marketing,
Mm-hmm.
very few people are ready to sell their property at a discount or do a deal with you on the first day, right?
Right.
You have to build a relationship with them. You have to really understand how you can help them and add value to them in their situation. And most people you can't. So you have to be efficient about spending your time with the people that you think you can actually help. But, our average, um, like from the time we first talk to somebody to when they actually end up signing with us and then we get paid from that, I mean, that can be a year, that can be 8 months.
Mm-hmm.
So what happens is when you're starting out, you're filling your pipeline up with leads, and then after 3 or 4 months somebody will call you from someone you talked to 3 or 4 months ago, and they'll be like, okay, I'm ready now.
Right.
And so it's just a very slow, it's delayed gratification. So you're just building up more and more leads, more and more leads, and as time progresses, just people that you talk to from months and months and months ago that you're following up with are finally becoming ready and ready and ready.
Mm-hmm. Okay. Yeah, that makes sense. And then I know, so what did you end up doing? How many deals did you end up doing in 2020?
So we did 44 deals under contract.
44. Okay.
Yeah.
Everybody hear that. So he did 4 deals in 2019. And then at the beginning of 2020, he did like a deal a month for like 4 or 5 months. So now he's got, 7 months left of the year to do, you know, 39 more deals. Right. And so it just like continually, that's that J curve just like takes off, and all of a sudden it's just like skyrocketing.
Yeah.
So you did 44 deals in 2020. What was your average like gross profit on those deals?
It was 17,000, just shy of it, like 16,900.
17 grand on 44 deals. What a deal. That's
Yeah.
awesome.
Yeah. And what happened too, where things really took off too, I started doing formal mentorship with Casey Ames, who is a huge.
I just bought his book, actually.
Oh, no way.
His Bigger Pockets yesterday. Yeah.
Oh, yeah.
It's funny.
Yeah. He's a huge player in the Boise market, and he's just absolutely crushing it. So having him as a mentor, and then I found my acquisitions manager who's boots on the ground in Boise. His name is Brandon Rhodes. And he actually found me on Bigger Pockets, which is kind of funny how things come full circle, but because that's how I found Corby originally. But and then he started working with me, and he would go on appointments for me like after his 12 or 13-hour day construction job. And I was like, this guy is totally motivated. Like, I have to work with him because he's really motivated. And he's gotten to the point where he's closing like anywhere from 4 to 6 contracts a month just by himself.
Sweet.
So
Right on. So now that you're this big, I mean, I can't imagine you're just getting all these deals from driving for dollars. So if somebody's like, they're getting to the point, they're doing a couple deals, maybe a deal a month, like how do they go about getting more data? Like what data do they go get? What's the next step in the process?
yeah, so I use a software called PropStream for a lot of my data. It's like $100 a month or something, but you can pull a lot of lists from there. You can, they actually have a comping feature that you can like use as a rough way to gauge value of things. So
Mm-hmm.
that's mainly where we're getting a lot of our lists. Of course, you can always go to like your local county or city municipality and ask for whatever they have too, and that's all. A lot of that's public record, so you can just request that stuff. So
Okay. And
combination.
like a lot of counties, you could just probably do it online, but, or you go down there and you get like probate leads or power of attorney. Uh, what else can you get? The city, you can get like maybe like water shut off
Yep.
lists, things like that.
Yep, exactly. Yeah,
Okay.
and You don't really, it's kind of funny. You don't really know like what your state and city is going to offer until you ask, because there's like 20 different things that you can ask and you can't get them all, but it just kind of depends on your area.
Okay. Yeah, that makes sense. Now, are you are you still mailing, doing mailers, or do you do cold calling, texting? Like, what's the way that you're getting in contact with these sellers?
I don't do a ton of mailing just because of how expensive it is.
Yeah.
It's really hard to, I did that in the beginning. Like anything you do is going to give you success, but you have to just realize it's a numbers game, right? So for me, starting out, I didn't want to spend as much money. I had more time, like on nights and weekends and my lunch break to actually call, and
Mm-hmm.
all calling cost me was my time. So that's still primarily what we do is mostly cold calling. We do some texting as well. Um, we're looking to do some online stuff too, but the cost of that is pretty high.
Like pay per
And
click and
yeah,
Google ads and things like that.
yeah.
Okay.
But then referrals too are big. I think we had out of the 44, I think we had 4 or 5 that were referrals.
Okay.
So, and those are totally free, right? So that's just building relationships in your local community and, um, being open and honest with realtors that to give them a call and you'll structure things the right way. I mean, we've had realtors bring us deals because we'll have them represent us as well as the seller so that they can get dual commission,
Okay.
just different things like that.
Yeah, that makes sense. And one thing I've gotten asked before, and I don't really know because I'm not doing the same thing you're doing, really. So is running the numbers on wholesaling, right? Because when you're going and you're buying properties from with an agent, you're kind of just like whatever it's listed at, you're going to either offer them that price or over these days. So how are you running the numbers on properties that you're wholesaling or keeping?
So I'll usually use a variety of data points. So I'll pull up Zillow, I'll pull up the county assessor site, and then I'll pull up PropStream as well.
Mm-hmm.
And I'll get like 3 different data points on a rough price. So with how fast things are appreciating in Boise, right? The county assessor's site is now like 20 to 30% undervalued typically. Uh,
Mm-hmm.
so, but you kind of know that that's about what it is roughly. And then you can look at the Zillow price, which is usually a little closer to market. And then when I'm looking at comps through PropStream, I'm actually looking at real comps that have been sold. So the combination of those 3 numbers gives me a rough feeling for what the after repair value of the property would be. So,
Okay.
and then I'm working backwards based on the photos or the condition or what the seller needs. I mean, now we're doing a lot of creative stuff like owner financing, like you said. We're doing some subject to acquisitions because we're finding a lot of people might not necessarily need all their cash up front. And if they do get all their cash up front, they take a huge tax hit in that
Mm-hmm.
year.
Mm-hmm.
So some people just want to spread it out over time, right? So, but yeah, we're looking at pictures and just kind of looking at through the eyes as if we were going to flip it, because we do. The best part about doing all this off market stuff is you get to keep the best ones, either as
Right.
rentals or flips, right? So we're looking at it through kind of a flipper's lens, like, okay, what after all the estimated repair costs that we think roughly, plus agent fees and commissions and closing costs on the back end, how do we leave, you know, enough margin that a flipper would actually want to spend their time doing this?
Right, right. So let's say you had a house that was ARV on it's going to be 300,000. Do you start with first like a percentage, like first it's like ARV's 300,000 times zero point 0.8 and then minus repair cost and then minus your profit, or how's that work? Just
I don't use any percentages. I kind of look at it as if it's one that I want to keep. So my general rule of thumb is I want to make at least 25 grand on a flip.
Mhm.
So that's like the lowest that I would even consider something. So I know when I'm looking at it as a wholesale, I need to at least leave half of that or more, depending on the scope of work, if it's a big job or a quick job or whatever.
Mm-hmm.
So
So you would take like the 300 grand, you have to take out realtor commissions and fees, right? So you take out like, 8% with tax and
yep,
escrow. And then from there, you take off like what, your 25 grand that you want to like have a buffer,
yep,
and then minus repairs.
yep,
So if
exactly.
there's $50,000 in repairs, you're taking off 8% minus 75 grand.
Yeah.
Okay.
Yep. Or if it's like a full gut job and I know the rehab's going to cost like 50 grand or more, I'll try to leave like 30 or 35 or 40 even, or depending on the neighborhood or
For a bigger buffer.
yeah. And your more skilled flippers, they're going to find ways to boost that ARV. So they're going to add square footage to the house. They're going to add a bathroom. Um, they're going to do tasteful remodels and higher end stuff to kind of boost the price. So,
Okay. Cool. Yeah, that makes sense. I know we could dive in on like all the specifics a whole bunch,
yeah,
but people feel free to reach out to you on Instagram or whatever. I'm sure you're pretty helpful. I did want to touch base on one thing that I do see on his Instagram. It was a deal that he just got under contract. Is that okay
yeah,
to talk about that?
yeah, absolutely. Let's do it.
Okay, so it was a 8 unit, right? Tell us about how that whole story kind of came about.
So it's an 8 unit in Ontario.
Oregon, not
Oregon.
Canada.
Yeah, exactly. uh, I had actually, I think it was from a Driving for Dollars list. So we're driving for dollars kind of more rurally now too, because a lot of people are moving outward from
Mm-hmm.
cities, right? And they're seeking more land and stuff. So got it from that list. And I think on that particular one, it was actually a realtor's number for a completely different property. So um, I had reached out to her. I think it was a cold call. And I said, we have a calling script that we follow. And we said, would you consider an offer for that property? And she said, no, I'm not interested or whatever. And whenever someone says they're not interested, we always say, okay, well, do you happen to know of anyone else looking to sell or have any others that you'd be looking to sell?
It's like the most important question, everybody. If you're listening, like always ask if they know somebody or if they have any other properties, right?
Yeah, I think 5 or 6 out of the 44 from 2020 we got just by asking that one question, right?
Yeah.
It's crazy. So we asked that and she said, you know what? I don't have any, but I actually know of another realtor with a pocket listing of a guy that's thinking about selling this eightplex. And boom, that's how it started. So
You're like, oh, this is great. I got the wrong number to begin with. She had
yeah,
nothing to do with the house I was trying to call, but she happened to know somebody. So wrong number, and it's not even her. So it's like a third person deal.
yep, it was the wrong number. And then she said, no, I don't want it. I'm not interested in selling any of mine, but I do know of somebody else. So like, it doesn't even matter if you're getting the right data. Sometimes you just have to be asking the right questions.
Okay. So this other realtor had a potential pocket listing of an 8 unit. So then you got the number of that realtor and then reached out to them and said, hey, did you text them or call them? How'd that go down?
Well, she was actually a realtor herself. So I just let her represent us on the
Okay.
deal. And then she was able to contact that other agent who had the pocket listing and kind of start arranging everything.
Sweet. So was that 8 unit in Ontario?
Yes.
Okay. And you're in escrow in it now. So,
Yep.
what did, are you negotiating like an on market price or is it kind of an off market price because it hasn't gone on yet? Like, how did that go? And what kind of return are you going to expect on that property?
Yeah. So the owner is looking to put the money elsewhere. So he wanted to close quickly on an owner carry, actually, and then we're having a small balloon payment here in a few months to be able to get commercial financing for it.
You're going to
So
do a balloon payment in a couple months?
yeah, yep.
What do you mean? Explain that.
So we're closing it via seller carry really quickly. So we're making a down payment to him. The property will be in our name. And then in about 3 or 4 months, we'll have the full remaining balance due. And basically that gives us time between when the property became ours and when the balloon payment is due to go to conventional bank or local bank to get regular financing for it and pay off.
Oh, okay. Yeah. That makes sense. So you just had to get, he wanted a little bit of money right now, but he wanted to close the whole thing shortly. So he's probably going to do a 1031. And
Exactly.
he's like, I need a little bit of time to find a property, but it can't be too long.
Yep.
Okay. That makes some sense. And then you guys would get the financing and go out there. So what's the return going to look like on that property?
I think our cap rate's like 8.5, which for
It's,
this market is we're pretty happy with.
yeah. Too bad you're
So
not getting 8.5 in downtown Boise. That'd be nice.
yeah, a couple of those and I probably wouldn't need to work anymore, right?
Yeah. Okay, cool. So when's that scheduled to close?
That is next Friday actually, so a week from or just over a week from today.
All right. I would ask you purchase price and all that, but it's not closed yet. So, that's okay. So moving on real quick, what's the plans in the future? Like, what's your goals? Like, where are you headed? You going to continue to do this wholesaling thing and grow that, or you just want to try to get as many doors under your belt as possible to quit your job? What's the plans coming up?
Yeah, so I think our team is growing. So our team is 7 people now. So we just hired a second acquisitions manager, and now I just hired a lead manager as well, who's a virtual assistant. And then I have 2 virtual assistants underneath the lead manager that are doing all the like day-to-day calls and the initial marketing to people. So
Okay, so you have real quick. You have your acquisition manager, which is you have 2 acquisition managers.
Yep.
Right, and then a lead manager, and 2 VAs that are under the lead manager.
Yep.
And then who else do you have? Do you have anybody else?
And a transaction coordinator.
And a transaction coordinator. Okay, cool. And you have enough leads that you're giving for 2 full-time cold callers, or is it 1 cold caller and a texter?
1 cold caller and then 1 texter. Yeah.
Okay, cool. Okay, let's go continue. Sorry,
Yeah,
interrupt.
no, you're good. You're good. So a lot of my time these next few months is going to be spent training them to get them up to speed so we can up the volume a little bit and get more opportunities. And also, for me, it's getting private money. So we set a goal to raise 5 million in private funds this year because we want to be able to double close a lot of these or go after bigger properties, do a couple more flips, all that kind of stuff.
Double close for everybody that's listening is like, so you can close on the property, let's say on the 1st. So you have to actually have the funds, but then you have a buyer to then sell it to you like on the 5th or even the 2nd, just the next day, but you have to have the funds in between, right?
Yep, exactly. Yeah.
Okay.
Or instead of wholesale, we'll do a wholesale. So we'll actually buy the property and then get it cleaned out like in a day or 2 and then just relist it immediately.
Okay. I was kind of thinking that myself. I was like, if I just like wholesale some property, like try to find some off market. And then if I have enough to like buy 1 or 2 houses a month cash, then I don't have to do that many deals because then I can pay myself a return maybe.
Exactly.
And then so I'm getting a good return like personally, but then the business is also making a little bit of money. But that's kind of like a small mindset, I think. I probably should like bring other people's money and do more if I was going to do this, seriously. But okay, no, that makes sense. So 2021, you're going to do like what, 200 houses since you did 44 in 2020?
Well, our goal is to do 2 million net profit. So
Net profit. Okay.
How we get there, we'll see. We're trying to, and then secondary to that, we're going to try and get 10 grand in passive income a month.
Okay.
And a lot of that'll come from the creative deals like the seller carries and subject twos and that kind of stuff.
So it's 117 deal, or no, probably more. That's like 150 deals because of net. Yeah. So 117 would be, that's why I was looking down. Yeah. Okay. Makes sense. And then 10 grand passively. Is it just you that owns the business or is there anybody else?
It's just me that owns the business. So,
and then you're going to leave your engineering job, I would hope.
Yeah, probably shortly. We'll see.
As long as your bosses don't listen to this, which from our millions of listeners, it's not quite yet. Okay.
And then in the second half of 2021, or maybe probably more realistically like Q4, I might be looking to another market, something that's a little cheaper, just so I can start diversifying and 1031ing some of my personal assets to get more passive cash flow. So
Cool. Yeah, that's man, I wish you had more time, but I dive into that new market strategy a little bit. Maybe we'll have you on once you identify the new market and then how you
yeah.
identified that market and stuff, So, okay, let's think. So, give us one program that you use that just makes the whole life ton easier, the whole process and everything, organization easier for this business.
I would say Mojo.
Mojo.
Yep.
Mojo's a calling app, or do you use it for like CRM and everything?
Yep. The whole 9 yards. So you can upload a list to it. It'll dial everything for you. And then it also has a built-in CRM and like a schedule, so you can schedule your follow-ups and everything. And the dialer makes it so you can hit like 10 times the amount of people as if you were hand dialing. So
Okay.
yeah.
Cool. Right on. Well, Ryan, thanks for being on. Where can people find out more about you, your company, what you're doing, all that kind of stuff?
Yeah, so I'm most active on Instagram. It's at Weimer Investments. So WEIM, like Mary, ER Investments. So hit me up on there, and I'd be happy to help anyone. So
Okay, cool. Right on. Thanks, Ryan. Appreciate it. And enjoy that nice San Diego weather. I might go sit out in the sun over here. It's sunny today, so
there
we'll
you
see what
go.
happens. Well,
Nice.
thanks, man. Have a good afternoon.
You too.